Hello, everyone, and welcome. My name is Richard Henke. I am with Zacks Small Cap Research. We are a division of our parent company, Zacks Investment Research. We do fundamental research on small and micro cap companies using a team of 10 seasoned research analysts. Right now, we've got 95 companies under coverage. And if you've got any questions or for me or ideas for coverage, please contact me at my first initial last name, RHANTKE @Zacks.com. So this is another in a new series of Fireside Chats by Zacks Small Cap Research. And with me today is Jack Heilbron, who is the CEO of Presidio Property Trust, which trades on the NASDAQ under the ticker SQFT. Hello, Jack. How are you?
I am fine. How are you?
Good. Very good. Thank you. And thank you for your time. Presidio is covered by our research analyst, Marla Marin. She's had it under coverage since, I think, February of 2021. And in her latest report, she has a US dollar $6.25 price target on the company. So, her report is widely available on all the institutional retail investor platforms and other sources, as well as our website, scr.zacks.com. And you can get Marla's contact information. You can see other coverage that she has and we have as well. So, Jack, I want to get right into it here. Efficient use of your time. So I've got a series of questions from Marla and myself, and I'm going to start right off the bat with, can you give us a little bit more color on what specific real estate categories you're focusing on to grow that that particular portfolio?
We're open. We'll buy any type of property, but currently we're trying to concentrate on our model home division, which buys model homes from national builders and leases them back to the builder while they're in the process of selling out the development.
So what makes the model home, what makes that so interesting to you? What's so attractive about it?
It's got all the advantages of a triple net lease, and there's a lot of companies that do triple net leases.
Okay.
But the real advantage of this is a short-term lease. It's 2 to maybe 5 years. So you're redeploying your capital on a continuous basis.
Oh, okay. Interesting. Okay. So talk a little bit about your geographical markets where you're going to bring on new assets or add new assets.
Primarily in the Sun Belt. Right now, we're adding in most of the properties for the model homes have been in Texas. Our last non-model home purchase was also in Texas, in Houston.
Okay. Okay, Texas. So any other areas or any areas that you're staying away from? That's sometimes people, they want to know.
That's probably a better question for what we avoid. We're staying away from the major cities, the New Yorks, the Chicagos, San Francisco, LA. We like to be in smaller markets. We have properties in Denver. We have 2 cities that we're in North Dakota. We think it's a very dynamic market.
Okay, interesting. Okay. So, all right, you've also been fairly active divesting assets to reinvest in the new properties that you're talking about. Talk a little bit about what goes into the decision to divest assets and to sell a property.
We look at when the growth may be out of that market or out of that particular property type. We will then try to redeploy the capital into an area that we think has more growth. An example is we've sold a number of our properties in Colorado Springs. We also had a number of self-storage units that because the cap rates have dropped, we thought it was an opportune time to sell.
Got it. Okay, interesting. So, all right, let's one of the elephants in the room, if you will, is the interest rate environment. Okay, can you talk a little bit about how challenging it is to add new assets in this kind of interest rate environment?
The interest rates aren't the problem. It's that the sellers have not lowered their prices. So the cap rates are still too low to make economic sense with the interest rates where they are currently. So that's why on more traditional assets, we're sitting out. We don't find that the case with the model homes.
Okay. All right. Interesting. So you did a refinance fairly recently. How did that go? Can you give us some color on what went into be able to refinance? Because a lot of companies are struggling to do something like that.
We actually had it was a easy process, very little trouble. We're trying to lengthen our maturities and not have a lot of debt coming short term. And so while we had a little bit of bump in the interest rate, we had another 5 years of stretching out maturity, and we felt that was a great trade-off.
Oh, okay. All right. Okay, good. Thank you for that. Thank you for clarifying that. Okay, I've got a few more questions here, but I'm going to narrow in on you've discussed, a SPAC transaction that you've entered into with a company called Murphy Canyon Acquisition Corp. With a ticker MURF, Murph. Talk about that a little bit, because I think there's a little confusion out in the market about it. So can you give us some insights?
As we had touched on earlier in this conversation, we were finding it difficult to redeploy our cash into what might be more traditional real estate assets. So we sponsored a special purpose acquisition corp, Murphy Canyon Acquisition, to look for a company to take or companies to take public.
Okay, got it. Okay, so can you talk a little bit? You're probably limited what you can say. Could you talk a little bit about the upside, from the initiative?
Yes, we've entered into a merger agreement with a biopharmaceutical company by the name of Conduit.
Mm-hmm.
That is frankly what I think is the future of a lot of medicine. They're more virtual than having 100 scientists in white lab coats in an office. They are working with a charity, healthcare charity, to license compounds from major pharmaceutical companies and then take them through clinical trials.
Okay, just sticking with Conduit for a moment, can you talk a little bit more about the synergies between Conduit and Presidio?
There's probably no synergy between Conduit and Presidio because Presidio is real estate. They're certainly as a major shareholder of the SPAC, and we will have Presidio will own approximately 4% of the combined company when the merger is consummated.
Okay.
And it will become one of our larger assets, frankly.
Okay. All right. Well, Jack, those are the questions that we had that we really wanted to get some more color and understanding on. Is there anything that we didn't cover that maybe you want to bring out for a minute or two?
Yes. The model home business is very unusual, and I think we're one of the larger, if not the largest players in the country in that. It's not a huge market in that we couldn't deploy $1 billion of assets, but it's a nice market as with us being a micro cap, and it allows us to get returns on our capital that adjust with the interest rate environment. So if rates go up, our return can go up a little bit. We're using amortizing mortgages on all the properties. So the longer they hold it, or the builder is developing the project, the more we're paying down the mortgage, which increases the return over time.
Okay. All right. Thank you. All right. Thank you for adding that. Okay. So anyone out there, if you've got more questions, if you want to hear Marla's take and more about Marla's take on the company, I mentioned our website before, and I mentioned, you can get Marla's contact information out of our website, out of her latest report, which is widely available. But if you want to go direct to the company, Jack, who would they contact?
Lowell Hartcorn at Presidio Property Trust. And the number is 760-471-8536.
Okay, good. Thank you. All right. Well, thanks again, Jack. Really appreciate it. And thank you for the audience, for everyone who tuned in. And that's going to complete the session. And everyone, have a good day.
Thank you.
Okay, thank you.